Starting a business is exciting. Yeah, but if I could go back, there are some things that I wish I would have known, especially about taxes. Knowing these lessons that could have actually saved me time, money, and a whole lot of stress. Man, I wish I would have known this from the very jump. So today we're going to talk about the things that I went through, the mistakes that I made, especially about taxes before actually starting my business. And I'm giving you the hard earned lessons about entrepreneurship that could have say that could help you avoid the same mistakes that I made. So let's jump into it. So being a owner of an accounting firm, meaning tax preparation, bookkeeping, all of those things, this is the one mistake that I see a lot of entrepreneurs make when it comes to their businesses, especially mine. I didn't realize how critical it was to actually open a separate bank account from day one. So the problem was I was mixing my personal money and my expenses with the same income and the expenses that was made for my businesses, right? And so mixing the personal and the business expenses made it hard for me to actually track. And it really made it hard for me to actually get a whole lot of deductions that I could have gotten when I first started my first business. And it was a nightmare. Like I really couldn't just go back from 6 months ago to realize, oh man, what was this transaction for? I don't know. But what that could have done for me was it could have flagged an IRS audit, because if I didn't have any of the documentation to explain these expenses, I was going to have to pay out of pocket. I was going to have to pay for that, right? Especially because I did my own taxes on TurboTax at that time. Now I know better, so I do better. The IRS don't care about your excuse. The IRS doesn't care about your excuses, only your records. Treat your business like a business, or it'll cost you like a hobby. Next, I didn't fully understand how income from business actually worked alongside having a W 2 income. So when you're starting out, you might think your job covers everything, but knowing how to track and report business income early is the key to avoiding surprises. The government doesn't wait for you to actually figure out taxes. They just expect you to pay up. And so if you don't understand that the amount of taxes that you get taken out of your W-2 doesn't fully cover your liability as a business owner, because here's the thing, business owners get taxed a whole lot higher than people who are W-2 employees. A lot of people don't know that. So there's a love-hate relationship when it comes to that. The bad part is you get taxed at 15.3%. But the good part is you get to write off certain things like mileage and the things that you actually use for your business. So it balances out. And the tax code is meant for business owners, not W-2 employees, outside of if you have a kid or certain things like that. The next thing was, not all expenses are created equal. I wish I understood the categories of deductions and how to actually track them properly. For example, distinguishing between startup costs, operation expenses, and personal use. The money you track is the money you keep. If you don't know your categories, you're throwing cash into the wind. And don't nobody want to throw no cash out to the wind. We trying to keep every dollar that we make. And so understanding these deductions and how to actually utilize these when it comes to business is very important. If you don't understand it, get familiar. So the next thing is, I wish that I used bookkeeping tools from the start. So being able to track all of my expenses, even if I don't have QuickBooks or a bookkeeper at the time, right? That makes it a whole lot easier, but do it in an Excel spreadsheet. But systems like QuickBooks or even having a simple spreadsheet can make tax time a breeze by keeping your income and your expenses organized. If you're unorganized, you're not going to win. Success is Success isn't in how much you earn. it's how much you keep. And what you keep is what you can prove. And so we have to understand that we need, as business owners, we definitely need to understand tracking your expenses, your income, all of those things, keeping record of all of your things is very important. I didn't understand that at first, but now I do, especially being essentially working with the IRS as an accounting firm. I have to, because I don't want them knocking on my door saying, "Hey, I need these documents to explain these transactions." Because if you actually have all those documents ready, there's nothing to worry about. The last thing, as far as the tax side, is planning for growth. Planning for growth. When you're starting out, it's easy to think small. I wish I had planned ahead for scaling my business, because these changes this changes everything from the tax strategies that I use to how you actually structure your business. Because there's a difference between being a sole proprietor and an LLC. There's a difference between being an LLC and an S corp. There are different strategies for each one of those. And so being able to understand and plan for those things, I wish I would have knew that early. So small thinking leads to small profits. Plan for growth, or you'll be stuck playing catch up. And don't nobody want to play catch up. So I got a question, and I'm gonna answer it real fast. So what's the difference? What's the difference between a sole proprietor, an LLC, and an S corp? A sole proprietor is someone who doesn't have that limited liability. So if someone sues them, they're coming for all of the assets that they have personally. So I don't want to be held, because here's the thing. When you actually create an LLC, you separate yourself from your business. Your business is looked at as an actual person, right? Now, granted, some people don't have those types of clients to actually get an LLC because they don't know if the business is actually going to work. But as an LLC, you have that protection to where people can't actually come for your personal assets if you actually do things correctly. So going back up to the first point of mixing your personal and your business. If you mix your personal and your business, they come in for all of that. But if you actually do or avoid that mistake, they can't come for your personal assets with that protection of the limited liability. Now, S corp is when you actually make a certain profit to where you actually pay payroll taxes. So a lot of people who make less than $50,000 a year in their business, they're not S corps, because that, for me, I would look at people who make $45,000 to $50,000 a year. That would be the S corps. So it's like a range between those. And so I hope that answers your question. I keep hitting my microphone. Speaking of that, so taxes doesn't have to be overwhelming or expensive. The truth is, most entrepreneurs miss out on deductions, fall behind on filing, and end up on more than what they should, just because they don't have the right strategies. Don't let that be you. Don't let that be you. That's why I have my 2025 tax waitlist. As a tax professional and accounting firm owner, I help you avoid those costly mistakes that I could have made in the very beginning. So you keep more of what you earn and stay ahead of tax season. You stay ahead of tax season stress. So when you join, you'll get a personalized guidance and tailored to your business, all the things that you need to be successful during tax season. So you can focus on the growth instead of worrying about taxes. Let that be me. So don't wait. We have an early bird special for 2025. If you join now, the earlier you prepare, the more you'll save. So make sure you click the link down in the description. So let's get back into the video. So the second part of this video is entrepreneurship knowledge. The things I wish I would have known as an entrepreneur starting out. Right? So running a business is way different from actually working at a job. So the first thing that I wish I would have known or avoided first was not having clarity in my purpose and who my audience actually was in every business that I started with. When I first started, I was just shooting for everybody. That was the problem. When you shoot for everybody, you eventually get nobody. So you have to be specific on who your audience is and what your purpose is. So looking back, I wish I spent more time understanding my purpose and who my business was actually meant to serve. It's not about having a vision, but it's aligning your mission with the needs of the right people. Without this clarity, it's easy to feel lost or overwhelmed. If you aim at nothing, you'll hit it every time. A clear purpose attracts the right people and keeps you on track. So the second thing was building a strong foundation. And so I always look at scripture at Matthew 7:24 and 25, when Jesus said, everyone who hears these words of mine and does them will be like a wise man who built his house on the rock. Starting your business with a solid foundation, a clear mission, systems, and values sets you up to withstand challenges. A shaky foundation leads to a collapsed business. Build it strong and you'll withstand any storm. The next thing was, don't wait for perfection. Don't wait for perfection. And the thing is, a lot of people say, oh, I'm gonna wait until then to actually start my business. I'm gonna wait until then to do this. I'm gonna wait until then to actually execute. But if you spent more time waiting on perfection, you won't ever start. I spent too much time trying to make things perfect before actually launching. A whole lot of planning, a whole lot of research. It didn't help. Done is better than perfect. And you'll learn so much more by starting and adjusting along the way. Waiting for perfection is just procrastination in disguise. Start now, refine as you go. You don't need you don't need another program. You don't need more time. Do it now. Start now. The next thing is investing in yourself. A lot of people, including myself early on, don't know what it means to really invest in yourself. I had this. No, I'm not talking to you. But you know, if the shoe fits, no. But I'm just speaking from my experience. But a lot of people don't understand what it really means to invest in yourself. You really don't understand what it means to invest in yourself. I wish I'd invested more in my coaching and mentorship early on. Trying to figure out everything out on my own, it slowed me down. When I finally started getting a coach, whether that be virtual, in person, it sped up the time from me being here to the goal where I was trying to actually get to. Get a mentor, because the speed is the thing that you want. You don't want to spend 6 years like I did trying to get to that a place of actually making money in your business. You don't want to spend 6 years doing that. But when you get a coach, when you get a mentor, they help give you insights on the things that you're doing. You could pay for mentorship now, or you can pay for the mistakes later. The choice is yours. So the last but most important thing that I wish I would have known starting out is the mindset shift of being an entrepreneur. One of the biggest things I learned was the importance of mindset. Running a business isn't just about strategy. It's not even about money. It's about believing in your value and staying consistent even when things get tough. You have to have the mindset to be able to be an entrepreneur, to be a business owner. Thinking that, oh, I'm just gonna do these things just so I can make some money. If you don't have the systems, if you don't have the understanding to be able to run a business, you'll never make it. You won't make it. Your mindset is the ceiling of your success. When you raise it, your business will grow with it. Do I have to say that one more time? Your mindset is the ceiling of your success. When you raise it, your business will grow with it. So change your mindset, change your life. Too many entrepreneurs feel stuck, overwhelmed by daily tasks, unclear on their purpose, and unable to turn their efforts into actual profit. Now, this is why I actually created the Purpose to Profits Mastermind. This ain't just another program. This is an experience designed to help you gain clarity on who you are, who you're called to serve, what you actually offer, and how to create the business that builds your legacy. You'll learn how to overcome overwhelm, align your mission with your actions, and even build a profitable faith-based business if that's something that you're going for. My business is based on the principles of God. I see success already. I may not be a millionaire yet, but I see the success already. The momentum carrying this business is all him. So I want to invite you to join. Imagine no longer feeling stuck or scattered, but feeling confident and equipped to grow a business that serves your purpose and brings financial freedom. Don't let another year pass. Don't let 2025 pass without making progress. So make sure you join the Purpose to Profits Mastermind today. Click on the link in the description so that way you can join this transformational journey. And so if any of the message resonated with you, or if you had a similar experience, make sure you drop a comment down below. I want to know, what's the one thing you wish you knew before starting your business? And before you go, don't forget to like this video, subscribe to the channel on YouTube, and hit that notification bell so you don't miss any future content. Follow me on social media for more tips and inspiration, and I'll see you there. And remember, every mistake is a stepping stone to your success. Stay committed to your purpose, trust the process, and keep building the business that God has called you to create. And make sure that you follow us on Instagram at the Marion Davis, which is right here, Marion M. Davis on YouTube, and Marion Davis on Facebook. So until tomorrow, because we still going live for the rest of the year. We got 16 more days. And I'm coming with heat every day. So until tomorrow, y'all be blessed, and we'll see y'all tomorrow. Peace.